Artificial intelligence has been a key part of the tech story in 2024, helping to drive the sector higher, up nearly 25% this year. And the AI story is set to continue in the new year, but perhaps with slight differences here. Here with more on what to know about investing in tech, we've got Kimberly Forrest, who is the Bokeh Capital Partners founder and chief investment officer. Great to have you here with us this morning, and happy holidays to you. As you think about the trends that could continue to drive the tech trade in 2025, what are some of the bullet points that investors need to keep in mind?
Sure. Well, let me just briefly tell you about me and maybe why you should pay attention to me. I actually was a software engineer that did AI back in the 90s. And whenever I moved into the current industry, I was a sell-side analyst covering software stocks starting in 1999. So I know a thing or two about tech investing and bubbles. And I wouldn't say this is necessarily a bubble, but I think you really have to be careful about just throwing money at the same old places that you did last year, because technology needs different things as it rolls out. And this is going to be a longer rollout than anybody who's currently investing and has won so far is really prepared for, or at least that's my opinion.
A handful of companies that made it through the dot-com bubble and were able to chart their own way to recovery, not only in the share price, but also even furthering the shareholder value, the actual size and scale of their businesses. Some of those are still around for this generative AI era now. What are some of the core characteristics that you see between companies that were able to make it through the dot-com era and those that are able to navigate through successfully this generative AI boom?
I have to tell you, that is the best question I've heard on AI so far. Thank you for that question. So here's what I always look for in technology is what problem are they solving and what price is the solution, and does it merit to be solved by technology. Back in the 90s, technology for AI was unbelievably expensive. We didn't have the data we needed. The machines themselves were, we spend a lot of money on them, but we have big machines now, right? So we're getting bulk purchasing, not the artisan kind of machines we used then. So I have to, scratch my head and say, are we solving problems with this, or is it just cool? And right now I have to say, the products that I've seen are just cool and not necessarily solving problems, and certainly not at a price that we can afford. JP Morgan did a real quick survey on how much the top 4 companies have spent so far through August. So that's Microsoft, Alphabet, Meta, and Amazon. And it's $142 billion. That is a lot of money. And I don't see a problem that is being solved for that merits that cost.
So how can investors then grade the spends versus the timeline for it to come to fruition and the return on that investment?
Sure. Well, pace yourself. And understand that the technology is going to mutate a little. Right now, Nvidia is the big winner, and they have a GPU chip. But it seems like Broadcom has a solution for another part of the problem, which is inference. So maybe you want to look for companies like Marvell and Broadcom that are adding to the solution, right? So you want to do that. And I wouldn't kick Nvidia to the curb. They are still doing very well, and their product is needed. It's just that you may lose momentum investors there as people have other choices and other directions that the spending is going to go in. So right now, Nvidia really moved higher because it was a momentum investor's darling, but also because the underlying product is very necessary for the next generation of computing.
Kimberly, really actionable advice and valuable insights for our viewers. Appreciate it. Thank you.